there's one digital commodity that is a scarcity. And if you have a long time horizon, if you're willing to wait a decade, if you're willing to live, if you're willing to be beat this way and that, tossed on the stormy seas of fate by the monetary winds that blow, they will blow in your face, they will blow to your back, and if you're going to, stand on the deck or lash yourself to the deck and you're prepared for a very rough journey, you should be able to make it to the promised land with 100% certainty, not 100% certainty, but it's an opportunity, right? And in my opinion, the odds are better of a good outcome than the odds that my ancestors took when they left, Lucerne, Switzerland in 1730.
As Bitcoin continued to trade lower and lower over the past week, a lot of negative media attention turned to the biggest players in the crypto space. Michael Saylor's MicroStrategy is the public company with the largest Bitcoin holding, so it was expected that a large part of the negative press attention would go to him and his company. And it did. First came the concerns about a margin call on his loan and a possible liquidation that would take the whole of the crypto market under. However, Saylor dispelled those rumors and remained as cool as a cucumber even when Bitcoin slipped below $18,000 on Saturday. Whatever the market brings, Saylor has also assured everyone that he is in this for the long term. In fact, Saylor has declared that Bitcoin either goes to $0 or $1 million. Since there is no way we hit $0, we can look forward to 7 figures as Bitcoin adoption grows exponentially. Before that happens, Saylor says investors should expect that the journey ahead will be rough because of Bitcoin's high volatility. He explains that there are 2 ways in which investors can approach the bear market. One approach brings anxiety and stress, while the other speeds up the accumulation of the world's most scarce and desirable asset. Will you stay anxious or continue stacking up sats? Please listen to Saylor's interview, subscribe to the channel, and drop your comments and observations in the comment section below.
So I was saying that the macroeconomic winds are blowing, and if you're an investor, you just have to decide how you're going to deal with it. And I think one choice is be caught up in the maelstrom and attempt to trade your way out of it by slavish devotion to the news of the day and attempting to predict what the central bank will do, and then try to figure out whether or not this is a good entry point or not a good entry point. And that's a recipe for anxiety, especially trying to pick the bottom and pick the top. And that's hard. A rational strategy is dollar cost averaging into scarce, desirable assets that, someone that's more affluent and more informed than you will want to buy from you in a decade. So if I was trying to come up with a plan to manage through the chaos, like I don't know that I could time the market. I think that I would just kind of dollar cost average my cash flows into a portfolio of property that was scarce, that was desirable, that would hold its value. And with the caveat that I need to be able to afford to maintain it. So if I could buy high quality property that I can afford to maintain for a decade, then as cash flows arrive, I would just allocate accordingly. And if you like Bitcoin, then Bitcoin, just dollar cost averaging into Bitcoin is a similar thing to that and rational. I think a useful chart is the 4-year moving average chart. I think if you look at the 4-year simple moving average of Bitcoin, it kind of reflects something synonymous to the book value of the network, because for 1,458 days, that number reflects the trading volume or the trading price of Bitcoin. So it's traded billions of dollars a day, 1,458 times. And so by the time you calculate that number, it typically lags the overall price, but it's gone up consistently for the history of the asset, for obvious reason. And if you're a dollar cost averager, or a conservative Bitcoin investor, I think that you would look at that and think, yeah, for obvious reason, Bitcoin hasn't looked this cheap since March 20th of 2020. Like that was the last time when it touched this. And then you got to go back to like February of 2019. And then you got to go all the way back to 2015. So I think if you look at the near term, Bitcoin looks like a volatile risk asset in the near term. And if your time frame is near term, if it's a high frequency time frame, then you kind of got to trade Bitcoin like a high volatility risk asset, or an amped up risk asset. And if you're a low frequency, long term trader, if you're buying it with expectation that a decade from now it'll be worth more, now it starts to look like a store of value, non-risk asset because there's no management team, there's no product cycle, there's no employee base, there's no competitors. It's not a company. It's got no nexus. It's not in a country. It's not land. You can't produce more of it. It's a different thing. So depending upon whether or not you're short time frame or long time frame, you see it differently. And I think that in the near term, it's pretty clear it's a risk asset, and the Federal Reserve is going to control all the risk assets. And so when they squeeze the money supply, all those assets, the tech equities, the Bitcoin, they get hammered down. To your point, it seems reasonable at some point they'll lighten up. We're going into the midterms, right? So the things that are constraining risk assets right now are the war, foreign relations and the war in Ukraine and the Russian foreign policy and the monetary policy. And those could very well change. If they don't change, then all the risk assets will have a hard going for the next year to 2 years.
Let's take a quick look at some of the recent market updates. Things are once again looking up for Bitcoin and the rest of the cryptocurrency market, and the minus 80% scare seems to be behind us, at least for the moment. At over $20,500, Bitcoin has gained 5.91% in the past 24 hours. The overall cryptocurrency market is also back above $900 billion, currently at $903 billion. According to reports, wallets holding one or more Bitcoin just reached a new all-time high of 865,254. Many more investors have become whole coiners, and it's thanks to the recent crash. Here is a tweet from Bitcoin influencer Bitcoin Archive. Just in, 13K plus wallets bought one or more Bitcoin last week. The crash has been pretty nasty, but many people are taking advantage to stack more Satoshis. Are you totaling buying the dip or avoiding it like the plague? Please drop your replies and reasons for your decision, as well as what you think about Michael Saylor's interview in the comments section below. Also, hit the like button and check out our other crypto-related videos. Thanks for watching.